When I got interested in investing, I was scared about taking that first step, meaning making my first investment. I was super excited about that, but at the same time, I wish I started sooner because it took me a couple of months to really take action and start investing. The way I started was I started with index funds, and that's what we're going to be talking about in this video. So today we go over how to start investing in index funds, and especially for beginners, and why this is so good option is that index funds are extremely beginner friendly. Basically, index fund is already like a completed portfolio of different stocks or bonds, and they can be diversified, for example, globally. When it comes to investing in index funds, the thing that actually motivates me to invest even more money in there is that the earlier you start, the better for yourself in terms of long-term growth. The earlier you start, the more you can take advantage of compound interest on your investments. That's something I really keep in mind right now, even though I've been now investing roughly for 3 years. Let's first talk about what are index funds and what you have to understand about them. Index funds are a type of mutual or exchange-traded fund designed to replicate the performance of a specific financial market index. Rather than selecting individual stocks yourself, you can invest in index funds every month, and you don't have to worry about which stocks you're picking because basically the money you invest gets diversified into what's inside that index fund. Investing in index funds is a passive investment strategy. It provides broad market exposure and therefore it has lower fees, which is a really important factor in terms of long-term investing. If the fund you're investing in has high fees, it really affects the returns you're making. And the difference between index funds compared to actively managed funds is that index funds follow a certain market index, when on the other hand, managed funds rely on portfolio managers and analysts. They make the decisions how much they invest in a certain stock, which is inside that fund. And index funds are more attractive options for long-term investing because of low fees, and that's why I also started with index funds. And now let's talk about benefits of investing in index funds. So basically low costs. The reason they are low cost is that they are passively managed, like I told you, so they don't have portfolio managers or analysts making decisions where to invest. And this is good for you because those fees don't eat up your returns, right? Second benefit of index funds is that you get great diversification for your investments automatically. You can see a lot of different index funds investing globally, maybe only in North America, Europe, Asia, Australia. There's even index funds that invest only in one country. You can decide how much risk you want to take, but the main point of diversified index funds is that you can reduce the risk of your investments. Let's say you invest in an index fund that invests in USA and Canada, so you automatically get a bit more of a diversification between two countries. And if some of those companies that are inside that index fund don't perform well, you're not gonna lose your money. You're probably still gonna make some growth on your investment, and that's basically the key of diversification. It's the easiest way to reduce your risk when it comes to investing money, and that's why I also recommend starting with index funds, because you don't have to be thinking about losing your money. You don't have to make any stock research and think about which stock you should invest in. You can just put your money every month into index fund and it will actually do the job for you. So let's talk about the ease of investing in index fund. When you first start investing, let's say you put your first $100 into an index fund. So whatever platform you're using, you can tell them that, hey, I want to invest on the first day of every month $100 into this index fund, and it will happen automatically. Then let's talk about different types of index funds. Let's talk about geographic focus. So like I told you already, there's a bunch of options. You can invest in index funds that are, for example, only investing in US or maybe international. There's a lot of index funds that invest globally, and that's basically the easiest way to diversify your investments at the same time. If I had to choose only one index fund based on geographic focus, I would choose something that invests globally, because maybe over half of that index fund is still gonna invest in US or North America in general, and the rest is gonna be Europe, Asia, Australia, and that way I'm able to diversify my investments really well and still get consistent growth over time. To go even more in depth on this, there are sector-specific index funds. You can find index funds that invest in specific sectors such as technology or healthcare or finance. I would still recommend to invest in an index fund that has a couple of different sectors, because if you go all in on something, let's say healthcare, it doesn't perform well, it can affect your returns drastically. If you're liking this video this far, make sure to hit the thumbs up and subscribe for more so you don't miss the newest uploads. Also, leave a comment down below and tell me if you are already investing. Are you investing in index funds? And if you do, what are your top 3 index funds that you're investing in right now. Then let's talk about how to choose the right index fund for you. Consider your investment goals in general. Probably you have investment goals. In general, you have to first ask yourself, why did you start investing? What is the goal of investing for you? And based on this, you can actually make good decisions. You have to think about, do you want to get that compound growth over time, or do you want to get income from dividends, for example? But if you want to get income, for example, you can invest in dividend stocks and get paid. Obviously, it requires quite a big amount of money in those dividend stocks to invest in order to receive solid dividends. My investment goal is to get long-term growth and take advantage of that. Then, second very important factor is your risk tolerance and time horizon. When it comes to investing in index funds, my personal recommendation is to at least hold it 7 years. And what I would still encourage to do is to invest at least 15 years, because that's the point where you can really start to see the compound interest playing a huge role. And if you're not able to tolerate the risk of high risk investments, don't do that, because you're going to be worrying all the time about your money. Never invest in high risk options if you can deal with that risk. Another good way to find exactly right index fund for you is that use some tools and resources to find the right one for you. Use Morningstar, see their ratings, read financial news every day. Let's talk about investment strategies with index funds. Best way is to just buy and hold. That's what I do currently. The idea is that long-term strategy. So the longer you invest, the more you put money in, the better you can take the advantage of compound interest over time. But what's really important is that you invest consistently over time, and that's why I recommend automating the process of investing in index funds. Make sure not to diversify too much, because if you diversify too much, you will not be able to see those good results. Hopefully this was helpful and easy to understand how to start investing in index funds and why you should do that. I highly encourage you to start today. All it requires is put $50 into an index fund, start doing it every month, and enjoy the growth you get over long term. Investing even $50 every month is $600 a year invested. You have to always think long term and understand the point of investing if you want to grow your financial stability over long term. That being said, that's all I got for this video. If you made it to the end, I highly appreciate you. If you're interested in more content about personal finance, make sure to watch this video next. It is about 10 financial terms everyone should know. I think it's very important to know these terms if you're just starting investing. If you're new to the channel, click here to subscribe. Start investing today. Thank you for watching, and I'll see you in the next one.